Meanwhile, I do want to draw your attention. We are showing the NASDAQ for a reason, down 345 points right now, led by big declines in the likes of Amazon and Microsoft and Alphabet and a host of others. The heavyweights that were leading the parade are now leading the exit from the parade. For now, Scott Martin, Kingsview Asset Management. We've got Jack McIntyre, Brandywine Global Portfolio Manager. Scott, to you first. If I had a dime for every time I've seen the great correction ensue for technology stocks and Titans, I'd have a lot of dimes, right? So the latest argument is they're coming back to earth because interest rates are rising. Capital gains taxes could be rising, a good excuse to sell these high flyers while you still can make some money. So is this time any different from some of the prior?
Yeah, and you could have made a few dimes plus, Neil, if you actually bought into those corrections and actually tried to avoid the fear trade that was out there in the selling and actually take advantage of lower prices. Look, these tech stocks, these high flyers, these momentum plays don't like the notion of higher interest rates. We've learned that a lot this year. Here's the one discouraging thing, though, Neil. The companies you mentioned earlier on, the Apples, the Googles, the Microsofts, the Amazons, all had blowout earnings of recent note, say, the last couple weeks or so.
Right.
Some of the earnings reports that these companies had were amazing. And the company stocks have not gone up since. They went up for like a day after and then pulled back considerably in some cases since. That's a little discouraging from the standpoint of what the market was expecting, what the market got, and what we're seeing from the stock prices themselves.
You know, maybe adding some salt in the selling wound today, Jack, was this news out of Janet Yellen at this Atlantic conference in which she said that, you know, rates would have to raise somewhat to keep the economy from overheating. I don't think she said anything that, you know, average market watchers would be stunned by, but maybe coming as it does a week after we heard from the Fed chairman, the present Fed chairman, Jerome Powell, say that that was unlikely. I'm wondering what's going on here. What do you think?
So, you know, we've had rates move up pretty significantly since August of last year. Then in February and March, the long rates really started to accelerate. So, you know, that I think that's already sort of reflected. Neil, one of the things I think might be going on as we get into 2021, you know, markets are forward looking. They're going to start looking at 2022. Hey, we're probably at peak economic growth, peak earnings growth, you know, and certainly a peak fiscal stimulus. So I don't know, and I'm not trying to pick a top in the market, but to me, it kind of makes sense that we start to see maybe a little bit more two-way flows in certain sectors, and tech is certainly one of those.
Yeah, you know, it's hard to glean trends in a market like this, but it's one that bears watching, and we'll keep watching it. Scott and Jack, thank you both very, very much. One other trend we're watching.